Hello, everybody. Brian here. Talk about Coinbase here. Today's May 11th. It is 13:46 p.m. Eastern Standard Time. Got three articles here regarding Coinbase. First one from Bloomberg. Pretty important stuff. Not a fan of Coinbase. Never have been. Never will be. But let's take a look. Coinbase says, this is on Bloomberg.com. Coinbase says no bankruptcy risk amid black swan event. Coinbase filing, SEC included new risk factor disclosure. Custody coins could be subject to bankruptcy proceedings. Because this is a garbage exchange, your money's not safe here. And even this idiot, the CEO Brian Armstrong, there's no risk of bankruptcy for the largest U.S. cryptocurrency exchange, even amid a black swan event. So, this is a complete farce. A filing late Tuesday by Coinbase included new risk factor based on recent Security and Exchange Commission requirements for public companies that hold crypto assets for third parties. Because custodial held crypto assets may be considered to be the property of a bankruptcy estate in the event of bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings, and such consumers could be treated as our general unsecured creditors. Amazing. So what's the point of registering if they are not going to protect their clientele of money? What a joke. This exchange is a complete farce. Coinbase will take additional steps to ensure that it offers protection for its retail customers that match those offered to prime and custody customers, Armstrong said in a Twitter thread. We have updated our retail terms sooner, and we didn't communicate proactively. How convenient when the risk disclosure was added. My deepest apologies. What a jack-off. Shares in the company fell 16% after regular trading as first quarter revenue missed analyst estimates. This guy shouldn't be having a license to even license a lollipop stand. One, this is his tweets. There's some noise about disclosure was made in our 10Q today about how we hold crypto assets. TLDR, your funds are safe at Coinbase. No, they're not. Just as they've always been. Please, get your money out. We have no risk of bankruptcy. However, we included a new risk factor based on SEC requirement called SAB 121, which is a newly required disclosure for public companies that hold crypto assets for third parties. 3. We believe our prime and custody customers have strong legal protection in their terms of service that protects their assets even in a black swan like this. This is the drop in crypto for the last week or so. For our retail customers, we're taking further steps to update our user terms such that we offer the same protection to those customers in swan events. We should have had that in place previously. So we apologize for that. So if the SEC didn't do this guy would be behind bars. And I'm sure a lot of people would be chasing after him for their money with pitchforks and whatnot in hand. This disclosure makes sense is that these legal protections have not been tested in court for crypto assets, specifically in that is responsible, however unlikely that would decide to consider customer assets as part of the company in bankruptcy proceedings. Wow. How many more points is this? This is amazing. Where did I leave off? Right here. This disclosure makes sense in these legal protection. Okay. 6. We should have updated 7. Finally, we of course, offer a self-custodial wallet. That's a joke in itself. Coinbase wallet for those who prefer to store their own crypto. That wallet is a complete idiocy. Our goal is to protect the best custodial self-custodial solution in crypto. Each carry their own risk and benefits, and it's important. 8. The customers could choose the best solution for their needs. Coinbase is the bottom of the barrel. We'll continue working to improve customer protection in all products across both categories. This is a joke. This is why you should never be on Coinbase. Trading on Coinbase, holding on Coinbase, because this right here just says it all. If you want to have a proper exchange, go over to Kraken. They have something called proof of reserve. They've gone through the audit so that they've proven that they have all the money in the world to protect and cover all of their customers' accounts if something did happen. Kraken has that. Just look it up. It's called, again, proof of reserve. Okay, moving over to the second article. Crypto1media.press. Is your crypto safe on Coinbase? CEO says retail holders at risk. The answer from what I'm reading is absolutely no. And if you believe that, you deserve to have your money lost. CEO Brian Armstrong said on Wednesday exchange retail customers may not be able to recover their holdings in case of bankruptcy. Just take the money and run, Armstrong, you crook. Also admitted that the company has disclosed this to its customers until a risk was highlighted in a filing on Tuesday. His comments come following in a recent disclosure that suggests if Coinbase were to go under, it could treat its customers as unsecured creditors. How nice. Disclosures sparked widespread outrage on social media. Good to know that. Fueling an increasing number of calls to withdraw crypto from the exchange. Good, and keep doing it. No risk of bankruptcy. In a series of tweets on Wednesday, Armstrong admitted that Coinbase had not effectively updated its terms of use to reflect potential risk to retail traders. An absolute egomaniac, arrogant piece of garbage. He said that the new disclosure of potential risk was made because of a SEC mandate. But this has not been communicated to retail traders. You arrogant piece of shite, which made most of the exchange's user base. Armstrong clarified that this potential risk was only in the event of bankruptcy. Oh, and it could happen. MicroStrategy could get a $200 million margin call if Bitcoin goes down to 21K. Something the exchange was no risk of experiencing. This treatment of company holdings during bankruptcy is largely up to a court, something beyond the firm's control. But the row over Coinbase highlights a common criticism of centralized exchanges, that a holder does not truly own the crypto held through a centralized medium. Coinbase only also offers a decentralized wallet service. As I said, that wallet service is a complete joke. Q1 revenue volume slump. When exchange does not face a bankruptcy risk, it is still under pressure from poor market conditions. Coinbase first quarter revenue slumped 35%, while its trading volume dropped $309 billion from $547 billion, the company said on Tuesday. Shares on the exchange tumbled over 13% after market trading. Weak results amid one of the worst capitulations seen by crypto markets in a year, which has wiped nearly $500 billion of market value. With more than 5 years' experience covering global financial markets, Embar intends to leverage this knowledge towards the rapidly expanding world of crypto and DeFi. His interest lies chiefly in finding how geopolitical developments can impact crypto markets and what could mean for your Bitcoin holding. When he's trolling through the web for the latest breaking news. Oh, this is just on the guy. Okay. First quarter of 2022, poor market stemming from fears of rising inflation outbreak from the Russia-Ukraine war. COVID shutdown in China and Hong Kong are largely dented economic conditions. This is what's dropped the price of Coinbase. Now, here at Coindesk.com, another article. Coinbase has no risk of bankruptcy. New 10Q disclosure languages. SEC requirement. CEO Armstrong says, what an arrogant looking piece of junk. So Armstrong said the exchange included a new risk factor based on SEC requirement called SAB 121, which is newly required for public companies that hold crypto for third parties. 10Q filed with the SEC Tuesday because custodially held crypto may be considered in the property of a bankruptcy estate in the event of bankruptcy. Crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings, blah, blah, blah. Also disclosed that new language means customers may believe keeping their coins on them would be considered more risky, which would in turn materially impact in financial positions. So why trade on it? In the event of bankruptcy, general unsecured creditors will be considered having the most to lose because they're last in line of claim. That's you holding your cash on Coinbase. Why? Reading this why, and don't think that being on Binance will be any better. Probably be worse. This Custodia Bank said in a tweet that this provision isn't new and is an inherent problem with the regulatory structure used by most custodians. Wyoming addressed this by creating a new customer-friendly structure designed to respect segregation of customer asset in bankruptcy and the Wyoming Special Purpose Depository Institution. Coinbase is down $72, down 70% to date. Wow. Okay, you know what to do. If you want to protect your money, showing you where to put your crypto on your own device, watch this free 2-hour video or build wealth with it. Again, just go to quantlabs.net/banking. And thanks for watching. Have a good day.